How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on US dollar versus Swiss franc. But we're going to start off looking at the DXY first. As we can see, last episode, I know the update's been a while ago, we are talking about how price failed to give us that false break around this swing low. We said it's either a false break or bearish momentum, and it's confirmed that it was bearish momentum because we got a lower swing high. So this swing high here is lower than this one. Now, going into the next week after getting this lower swing high or the following days, going short would have been ideal. We could see shorts were provided all the way down to the IPTA 20-day low, 40-day low, and 60-day low. Now, currently today, we can see Thursday, looks like we have some turnaround or some pushback against that selling move yesterday for Wednesday. Let's take a look at USWSI. So that USWSI long idea failed. We talked about that last episode. It was most likely going to hit our stop loss if the DXY was going to continue to trend lower. We saw Japanese yen as well rally. Now, that's inversely correlated to the DXY. When the yen gains value, the dollar tends to decrease in value. We can see that price, after all these up candles, is selling immediately and drastically as well. What we mentioned in the last episode was that we had this hurdle here to get over, this fair value gap. Let's zoom in. This fair value gap with that swing low inside of it. Now, that's an entry technique I like to use on the lower time frame for my intraday trades on my scalps. And here it's showing itself fractally on the daily time frame. That swing point is inside this speed down. It trades up into it and it creates the lower swing high inside that region. As you can see, this swing high is lower than this one up here. So after we got that raid on buy side here, that 20-day high, price continued to go short, selling in a premium. So my narrative was incorrect for US dollar Swiss franc this month, even though seasonally it was telling me that it was bearish and Swiss was going to be bullish. I was going against that, taking an educated guess that because the rates are higher, strength should flow back into the dollar and leave other fiat currencies. Now, of course, there's going to be moments and times where dollar does trend down and there's going to be pullbacks or retracements. But I do think long term, maybe 3 months from now, 6 months from now, a year from now, dollar should still be up in value unless there's still more competition going on with the rates. Now, if the rates start getting cut early, supposedly there's going to be one rate cut this year by the Feds, maybe sometime in November, I believe. I'm not sure, or September. And they said they're going to cut rates probably after the summer, going into the fall, and that might cause the currency market to move a bit because we're going to be making our currency unfavorable while other central banks still have a higher rate, and they will be more of a competitive currency to get into and flow into. We had this measured out here, this BPR, in the previous episodes. See how price drawed right down into it. Large range cycle yesterday. Price was small and then finally kicked off to a large range to downside. We finally got down here and took out that 20-day low. So we took out the 20-day high, purge, and then we reverted back down to the 20-day low. As anything in the market is always looking for buy side and sell side liquidity pools, and it will start to trend. If we take a look at the Swiss futures, you can see the inverse is applying. You see how price creates a swing low below July's opening price. It breaks a swing high here and prints a higher swing low. 1, 2, 3. So you can see there's buying coming in because each new swing point is higher than the next one. Same thing for the highs. Each swing high is higher than the next one. So there was a swing high here. They printed a higher one here. And if you look on the left side of the chart, you can see they're just raiding or running out buy side liquidity pools. Price may ultimately get back up here to that 20-day look back high for the futures. And if you take a look at the yen, you can see how they gain strength. So completely opposite to the dollar. Dollar's going down, yen is going up. Now, so far, what I'm speculating is that the market is most likely going to cool off. It's probably either going to make a bottom of the month, make a low, and might have some retracement back into the monthly range expansion. You can even see that British pound, AU, see it's trending up for July. Take a look at AU, EU. And there's some bullish trend going on here. NU still more sideways than anything. And if you take a look at gold too, gold was flying. Right? Gold making all-time highs again, running out those IPTA levels again. Took out the 20-day high, returned back into the 60-day old low. Had a nice retracement off of it there on that Monday. And then next day ran up, shot into that 40-day high. So it purged all these buy-side liquidity pools. There's still all these equal lows down here. Now, sooner or later, I'm not predicting when, it will get down to these lows. I don't know if it's going to be next month, the next 3 months, the next 6 months, a year from now. But sooner or later, if price were to pull back, these lows would be the target and become the draw on liquidity for gold. Now, just to bring it back onto you, Swissy, at this point, it's a large range cycle down yesterday. More than likely, the market was going to stall today, not make a large, drastic move today. It's going to be small again. I would like to see if tomorrow or next week will come back and pull into this range here. If there's going to be a start of a bottom or a potential retracement that could lead to a ultimate trend going into next month, and we'll see from there. But as of right now, the market is bearish for you, Swissy. Hopefully you found this insightful. Peace.